Very good morning, everyone. Charles here, FRGNT Daily Chart Analysis, 11:15 on Wednesday, the 28th of January, 2026 in Milan. Good morning to you all. Just taking a look at a pair that really isn't directly affected as a result of the movement of the DXY. As you can see, the DXY of the past few days has been incredibly bearish. However, we're not really seeing that momentum being carried over to EG, which, as I said, as a result of it not being a direct cross pair of dollar performance, we can look at this in terms of a standalone pair and not really having to take the DXY into consideration. So currently today, I am gearing up for a potential long position. Now, if I bring your attention over to the daily time frame on the bottom right hand corner, you can see I have a daily order block here as a result of this push in the market that caused the imbalance in order for me to then select that order block. Moving over to today's price action there, you can see how price has come into that daily order block and it has found the liquidity and it has then pushed off in a bullish fashion. What we can also see on that daily time frame is the fact that the daily 50 EMA is being respected. As a result of price trending above that daily 50 EMA, rejection to the lows, off it pushed. And once we had the break below, we found the imbalance as a result of the break up and around these areas, and price then pushed below that daily 50 EMA, and so on and so forth. And we've now made that lower low coming into the lower high, and price has then made what we would have forecasted to have then been a lower low. However, as a result of the market being supported at these lows by the weekly 50 EMA, where we are indeed expecting a rejection to the upside from that weekly 50 EMA, we also have previous weekly lows in and around those areas and some wick imbalances coming from that daily time frame, again giving pressure to the upside that price is not quite ready to break. So with that in mind, I've then taken down into the lower time frames to see if potentially I can find an area of interest where I can look for a potential buy, taking into consideration all of those elements that I've just mentioned, and am I able to find a long position up towards where we are seeing rejection. At this time, the higher time frame rejection is evidently coming from that daily 50 EMA. So take your attention now to the bottom left hand chart. That's the 4-hour time frame. Now, within that daily order block that has already been mitigated, managed to find an area of interest on the lower time frame. Again, that price is failing, to break below. That is by way of a 4-hour order block. Again, you can see that price was making lower lows and lower highs down from the left hand side, and then towards most recent price action, price has failed to make lower lows. And in fact, as a result of that 4-hour order block coming into play, we have then seen a significant break of structure on that 4-hour time frame. What's also significant on that 4-hour time frame, as you can see, price was respecting the 4-hour 50 EMA. The more I bring price action to the left hand side, you can see rejection to the upside, and off it went, creating a lower low, pulling up into a lower high area, rejection to the highs, again respecting that 4-hour 50 EMA. Until now, we have then had that significant break above, and we're looking for price then to have come back into an area of imbalance left behind, and we found that rejection again. What's important to note also on this time frame is that price is now trending above the 4-hour 50 EMA. So if price does come down to a valid point of interest at the lows where we'd be looking for a long position, it's imperative to understand that if you are still within a current 4-hour time frame span and price is at these lows, we are expecting that price will look to close above that 4-hour 50 EMA, giving us a wick to the low where we gained entry, and of course the candle we forecast would look something along those lines. Of course, not drawn to scale, but you understand my position. So again, it comes the question, or there begs the question, where could I take that long position from? So we can understand that within that 4-hour order block that has been tapped multiple times, as you see here, this area as well. But what's very interesting to see is that we're fine within that 4-hour order block. We have this 15-minute point of interest that price has not come back down to just yet. then as a result of this bullish move, we're looking to isolate a point in the market where we consider liquidity lies. Now, where is that point? As I enlarge this screen for you, you can see that there are no other 15-minute order blocks in and around that area that have not been mitigated. So as you start to move up high, you can see if I were to draw a line to the left, to the right, then you would see that the 15-minute order block is continually mitigated. The only one that is available at the ultimate lows is this 15-minute order block. So what I'm going to do is show that on all time frames and bring price across to most recent price action. So there lies a question again. So we've figured that, we've refined areas down from the daily, we've got all the supporting evidence at the lows, previous weekly lows, daily order block refined within the 4-hour order block. We know the weekly 50 EMA is in and around the area as well that we would expect price to reject from. This now becomes a valid point of interest. However, as I speak to all of those in the FRGNT Mastery communities, that just because you have marked a point of interest, just because you have validated that point of interest, does not now mean you are ready to take an immediate position. Reason being, of course, when price comes back down to these areas, the immediate intraday price action is going to be particularly bearish. So then we can refer to a multitude of entry criteria to pull ourselves into that position. Whether it's going to be an intraday break of structure, where price has made a most recent low from, whether we then break structure to the upside, pull back into an imbalance area, cause as a result of that break, take the position like so, then of course that would be a valid entry criteria using that 4-hour 50 EMA as a target initially. Not that we're going to be expecting a rejection from it to the downside, but what we are expecting is that price, if we are within a current 4-hour time frame and the 4-hour candle is printing here, we can have the expectation that the candle is going to want to close above that 4-hour 50 EMA. Now, if I am able to get into that position on side with the 4-hour 50 EMA, my targets are certainly going to be up towards these highs, towards that daily 50 EMA, where if I revert your attention back to that daily time frame, we can see how price is overwhelmingly bearish on that daily time frame, and price, more importantly, is respecting that daily 50 EMA. So I hope that makes sense in terms of a quick 7-minute breakdown for you all, in terms of dissecting a pair that isn't directly affected by the DXY, which will come as some good news for those of you, as I've mentioned, that were long on the DXY, and due to factors the DXY continued to melt below those points of interest. Here is a welcomed break from that DXY and a welcomed break from US dollar cross pairs. Thank you very much for your attention. All the very best. I appreciate your support across the FRGNT Mastery channels. Do take care.